What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and before I start this, I highly suggest you go and watch yesterday's video just so you have an idea of what all these marking outs are on my screen, because I'm not going to go through all of them. But yeah, we're going to just drop down straight to the weekly, and you can see how we've already traded higher above that monthly equilibrium I was talking about, and then we failed to take out that weekly buy side liquidity. So if you remember yesterday's video stating that if we don't take out that buy side liquidity in the London session, that will likely have a reversal, and you can see that's how we delivered, and we started to trade on back lower. So what does that mean? Well, as I was stating yesterday, I am looking now at this implied fair value gap, implied bullish inversion fair value gap to get traded to, as some kind of discount for price of the week. So definitely looking for that to happen, and I'd like to think that this equilibrium level can provide a level of resistance. So as we drop down to the low time frames, I'm now going to be looking around this level to see, okay, are there any PD arrays that we may want to, or that we can key off of, to send price lower to start thinking about discount PD arrays. So let's go to the daily, and you'll see here's our daily wick. We traded up higher, again creating that high, just about missing that weekly buy side liquidity, leaving these relative equal highs intact now. So what's going to happen, they'll likely come for these later on in the week, and now we can start thinking about potential discount PD arrays to create the low. Again, yesterday's video I brought our attention to a potential weekly bullish order block. In fact, let's quickly go back up to the weekly. So this level right here, I said as soon as this high gets taken out, this becomes a bullish order block. We took out that high today on Monday, so now this is a bullish order block. So I'm watching the open of that to be very sensitive to price and potentially turn price around again, allowing us to create a low down there. So definitely got my eyes on this range, and ideally we can stay below this equilibrium level that I've drew our attention to. So here's the 4 hour, and you'll see how we made the high at 5 AM, so that's just before London session, and then we had the reversal, and you can see how we're trading lower. We do have a breaker here, this last down close candle before the up move. This is a breaker level, so we should be looking at this to provide resistance to help continue to send price lower into our discount PD arrays. Now you can see we have a fair value gap down here. I'd like to see that get filled moving into the new day, and then again potentially reach even lower into the implied fair value gap down here. So that's pretty much what I'm looking for tomorrow. We will drop down to the 1 hour and get a closer look. In fact, I am going to get my daily dividers marked out, so just bear with me. So here's the daily dividers, we're on the hourly now, and you can see the consolidation that we had today before we just about broke lower at the very end of the day. So again, we do have a breaker. This is the last down close candle before the up move. So we have a high, a low, a higher high, and very recently we've taken out that low. So now I'm looking at this candle right here, which happens to line up with our monthly equilibrium. Remember, I'm looking for PD arrays around here to send price lower. That we have a breaker lined up with that very nicely, so we can get that drawn out. And now I'm looking for this to provide resistance in the new day to help send price lower. So how can I be confident about this? Well, as price trades into this, I'd like to see price continue to ideally respect the 50% level and then just not take out the high, basically. So definitely paying close attention to that high. If that high gets violated, then this weekly buy side liquidity will probably get targeted. But generally speaking, and overall, what I want to see is price find resistance at this level to send us lower in that moving into the London session. So that's what I'm looking at very closely. Then you can see obviously we have this massive gap higher from Sunday. This is the Sunday Sunday opening? This is the Sunday opening price below here. Then we gapped. So this is going to be a volume imbalance. There's a complete, or liquidity void even. Is it liquidity void? Vacuum block. Right, there's so many different names, guys. This is a vacuum block. It's completely void of any volume or wicks except for these. But generally speaking, between this low and this high, and let's just make it white for now, there's no trading there, right? So price will seek to trade through this, and we'll treat it like a fair value gap. So once we get below this, it will likely act as resistance to then what? Send price lower into our implied inversion fair value gap. But generally speaking, I want to see, can this get filled tomorrow? There'll probably be a nice setup for that, and then we can start thinking about trading below this Sunday opening price as well. So one thing ICT also recommends all the time, and I recommend, is have your Sunday opening price drawn out right until Thursday, and then based on where we are in the week, you can figure out, okay, if we're still below that Sunday opening on like Tuesday or Wednesday, then it's likely we're going to run it, and then we can start thinking about daily highs getting targeted. But generally speaking, I'm looking at this range. How can this consolidation hold up? Is it going to hold up? And if it does, can we now look at these this range to get filled, and then potential lows into this implied inversion fair value gap? So that's everything on dollar. Let's just look at the 15 minute here. Very consolidated, and environments like these, we do need to be careful, guys. Just be a little bit wary. Obviously low risk, especially with interest rates coming up and everything, but definitely keep an eye on these levels to see, okay, can we get below these lows and into this void right here. I'm going to quickly look at the 5 minute. Again, a lot of back and forth price action, not the cleanest, but again, we left that weekly buy side liquidity intact. We'll likely come for that later, and then we've got some highs up here now, which will be nice to get. It'll be nice to see if they can get swept later on in the week. So that's everything on dollar. Hope that all makes sense. Again, if you were struggling to follow along, definitely go and watch yesterday's video. And before we get onto GBP, make sure to join the mailing list. The link is in the description. You can also join me on Discord and drop a subscribe. So we're going to head over to GBP now. I do already have some marking outs here. Let me just quickly get my hourly dividers marked up, daily dividers, and I'll be right back. So here's GBP on the daily. Again, if you've watched yesterday's video, you'll be able to follow along with what everything is. This is that breaker range I was talking about, and I'm saying it. My bias still stands in that if price trades into this, it will offer us potential shorting opportunities, assuming that dollar does want to trade on higher. So definitely keep an eye on this range. But now that Monday's finished trading, we do have a nice fair value gap that's formed. Now the fair value gap is a lot more of a clean PD array to pay attention to, as opposed to the the breaker range. So let's get rid of the breaker range and draw out this fair value gap instead. And we do have unemployment rate at 2 o'clock, so we can expect a level of volatility at on pound. So let's definitely put daily fair value gap right there. And I'd like to think that we can see the premium get made inside this daily fair value gap to then offer us a potential reversal on that Tuesday or late on Wednesday. So in terms of the lowest I want to see price trade, I'm looking at the midpoint now of Monday's trading right here, consequent encroachment. And what do I mean by this? Well, ideally, if before we trade into this daily fair value gap, the lowest I want to see price trade is this level here. Ideally not even there, preferably 25% level. I'll get these marked out as well. And the reason I'm marking all these levels out is because, again, when I drop to the lower time frames, we're able to identify PD arrays that price may want to key off to then move its way around. So I'm just looking at how can PD arrays for price to key off and help itself navigate. But ideally, price will respect this level here before trading into that daily fair value gap to then trade on into our weekly targets. So I hope that makes sense. It's a simple if this happens, then this happens. If we simply just trade on lower and start disrespecting all of these, then it's likely we're just going to run for this sell side liquidity, and then obviously we would see dollar start rallying. It's as simple as that. But ideally, I'd like to think that we can dip into that fair value gap before seeing some kind of resistance found within it. So let's drop down to the 4 hour, and you can see we do have a nice little reversal that happened on the Monday, creating a low, just about running out this stop. So we have grabbed a level of sell side liquidity. We've traded on higher, taken out this swing high as well. So as far as I'm concerned, this is a change in the state of delivery, meaning that we should be looking for some kind of bullish PD array trade to. We now have this massive daily fair value gap to potentially fill. So now I'm looking at this bullish order block. This is the 4 hour, remember, so this should be quite a sensitive level. In fact, let's get this marked out with a longer. We'll use this, make it black, and I'll put 4 hour bullish order block. And remember, this is a 25% level off that wick. So again, ideally price shouldn't, as far as I'm concerned, price shouldn't need to come all the way to this 50% level. So I'm going to get rid of that. I am going to keep this 25% level marked out though, because we may find that price wants to wick down into that, and that's completely fine. I'll leave this here because that's just showing that sell side liquidity has been grabbed. Like so. So let's now drop down to the 1 hour and get a closer look. So here's my daily dividers. Classic reversal, came down, fair value gap. And we do have a breaker here as well, where we have a low, we have a high, we have a lower low, and then we have displacement to the upside. So this green candle here, which lines up with that 4 hour bullish order block, and that 25% level is a breaker, this whole range right here. So we can look for this to potentially provide support for price as well. Now I'm not going to draw out the whole range just because my charts are getting a little bit messy, but ideally, once price gets between this range right here, we can find support. If price wants to dig on deeper, so be it. It can. Obviously, there's a bullish order block down here. And remember, there is this high impact news at 2 a.m. So we might find a level of manipulation where pound might be digging deeper than, say, euro before a potential reversal. But generally speaking, I will be looking for this Monday high to get ran to help create the high of the week. So let's get this buy side liquidity clearly delineated. And I want to see that get targeted in the new day. But overall, I'm looking for a classic low get made, preferably support at the bullish order block, and then we can trade on high into our buy side liquidity and start thinking about filling this daily fair value gap. Now, let's go to the 15-minute, see what we can find. And you can see how we traded higher, ran out stops, and then we have another pullback into this breaker right here. So this is obviously a very sensitive level because it's sent price higher again. So again, this bullish order block right here, this down close candle, which just happens to line up with the 25% level of that daily wick, remember, is lined up right there. So as price trades down into this, it might be 3 a.m, it might be 4 a.m. I'm going to be paying very close attention to see if we get a reversal. If that's the case, we should be in for a nice setup for longs into the daily fair value gap. If this gives way and we start trading aggressively below, like the 25% level gives way and this breaker and bullish order block gives way, and we trade it. So if we find ourselves below this box right here, then I'll simply be out the charts. We may be able to frame some shorts, but again, price may not want to take out this low right now, especially the way that I saw that, especially the way that euro failed to take out this low and USD fails to take out the corresponding high. But let's say that we are below here, I'd simply just step away and wait. It's as simple as that, guys. But ideally, we see a level of support found around here to help look for further push higher. And as pound is doing that, I'll be paying close attention to dollar to see, okay, is dollar finding resistance at its, turning point, which we've drawn our attention to, this breaker, remember? So hopefully you're seeing how I'm looking at GBP and dollar and seeing how they correspond to each other in order to help trade and look for setups. Let's finish up on euro now. And we are going to start on the weekly here as well. So euro's been moving quite a lot weaker, and you'll be able to see that if you go and look at if you take a look at euro GBP, you'll see that euro's been traded on lower. So that's being shown there, and we can clearly see it in the charts. Now there is an implied fair value gap that's now formed on the weekly, which is right here. So this fair value gap right here, now that we've traded through it and closed below it on a daily basis, I do believe, yep, like so, this should now provide resistance. But if you remember yesterday's video, I brought our attention to this range already. I brought our attention to this breaker block, remember? So we got a high, a low, a higher high, and price displaced to the downside. So this breaker just happened to line up where the inversion fair value gap has just formed, which is only adding confluence as to reason why I'd want to see if price, if it does get up to here, I'm looking for shorting opportunities to send price lower. Now, let's take a look at how price has behaved. We haven't taken out this low. This is still intact. The same way that dollar's high is still intact. So if this is a reversal and we are to trade on higher, then it's likely they're going to target these lows later on in the week, maybe with interest rate announcements or CPI or whatever. But generally speaking, I'm looking for some kind of high to get made. So ideally, we can start to trade up to this breaker level. That would be a nice target. Let's drop down to the 1 hour. I don't have my daily dividers here right now. I probably should get them marked out, but same thing as pound pretty much. We got a breaker, low, high, lower, low, but you can see we're in the breaker currently, so I'm not looking at that. But this massive green candle is a mitigation block, so this will act pretty much the same way as a breaker. They're just not as sensitive. If you study these, you'll see what I mean by that. That's not the best color to use. Let's get this one. So again, some kind of low is going to need to get made before we trade on higher, right? So I'll be looking at this range specifically. Ideally, the 50% level of this gets respected. So let's get that delineated. And then let's go to the 15-minute and see if we can find any PD arrays. So there's a nice little low right here. There'll be sell stops below here. And then obviously we have all of these up close candles that price may be able to key off to then send price higher. So as euro makes this low below this low, and then we expect a reversal to trade on higher, we can be looking at GBP to be trading down into its discount before trading on higher. So that's how I'm looking at the new day, ideally. But it's really as simple as if dollar continues to respect its breaker. If dollar trades through this, whole nother story. Probably going to step away and let it trade on higher and start running those weekly buy side liquidity. But ideally, we see resistance. We can create some kind of low and then look for setups for the rest of the week. So I hope that all makes sense, guys. Very complicated. Definitely do be careful right now. You just need to be wary. Remember, CPI, FOMC, and PPI are all this week, so there is gonna be a lot of manipulation. But yeah, that's pretty much what I'm looking at. So that's going to be everything, guys. Thanks for watching. Don't forget to smash subscribe. Join the mailing list. The link is in the description. And also, I'm active on Discord, so don't forget to join that. It's been very active recently. Anyone that's in there listening to this, of course, you know what's been going on recently. So definitely come and join the Discord, and I'll catch you in the next one. Peace.